What's going on, y'all? Hope all is well. Another episode of Convos with your CFP Mario Payne in beautiful Jacksonville, Florida. Was not beautiful. Jerome Powell. He's at it again, y'all. Y'all know I love my baby TMF, TLT for people that's conservative. But definitely Jerome Powell came out today in his Fed minutes and he said what we did not want him to say, and basically admitted that he's been lying to the public for the last 2 years. A politician lying? Who does that? All of them. Anyways, let's get to his commentary. Let's get to how it's going to affect the stock market in a good way, and also from an interest rate standpoint, a bad way. But before we get started, like, share, subscribe as we continue to grow our YouTube channel. Get those likes up, y'all. But let's hear from Jerome Powell.
Political year, and the lens capital and interest rates. We're in a political year.
We are.
And the lens of a political year falls heavily on all government, all parts of government. There's a lot of debate about the past 3 years of high inflation and the impact on American families.
Man, he has AIDS, man. When he took this job in the Trump era a few years ago, he looked all young and vibrant. Man, 4 years of inflation. Man.
And now that inflation is receding, there's been a great deal of speculation about when the Fed would cut rates. Some say that it's going to be a lot of rate cutting this year. Some say none. What say you?
Also, you want to talk about grandstanding. This is what politicians do, right? So on my left-hand side, as you look into your left, his right as he's giggling with the bow tie, they're always backward looking, right? They're saying, what was done in the past? We want to talk about the future. What's going to be done in the future that's going to stimulate the economy or affect the economy in a negative way. But politicians, they always grandstand. Always grandstanding.
I say that really it will depend on the path of the economy. Our focus is on maximum employment and price stability, and the incoming data as they affect the outlook. And those are the things.
Now, max employment means no unemployment, right? So the thought process is if the economy is rocking and rolling, things are going good, people are being employed, we might not have to stimulate the economy, right? So that's employment. Things
we'll be looking at. I can go further if you'd like.
So at what point will the Fed be forced to cut rates? What does the data, what kind of data would you point to? And do you have any updates there?
What we've said is that the committee would like to see more data that confirm and make us more confident that inflation.
Confidence? How much more confidence do we need? I mean, inflation is going down. You guys remember 3 years ago in 2021, it was out of control. In 2022, even worse. 2023 started to go down, and now it's down. Now it's not down to their 2% goal, which Jerome Powell said that they look at as they lower rates, and now he's saying they don't look at it. I don't understand that. Not whatsoever. But yes, when inflation is good, that means the economy should be good, and we should be lowering rates.
Inflation is moving sustainably down to 2%. We have some confidence of that. Inflation, headline inflation has moved down more than 3 full percentage points now to 2.4%, as I mentioned in my remarks.
Okay, so if it's moved down from 5.4% to 2.4%, 3 full percentage points, like you said, why aren't we lowering rates? Heck, in November, most people thought that we would start lowering rates in March, like next week when they had their Fed meeting. That's not going to happen now. Most people predict it's going to be in June, maybe even July. So why is it that inflation's going down? You said literally a year ago that as inflation started to go down, you would start lowering rates, but you haven't cut anything. Come on, man. You're hurting TLT and TMF.
We want to see a little bit more data so that we can become confident and so that we can take that step of beginning to reduce policy rates. It's a very important step. We think because of the strength in the economy and the strength in the labor market and the progress we've made, we can approach that step carefully and thoughtfully and with greater confidence. And when we reach that confidence, the expectation is we will do so sometime this year. We can then begin dialing back the restriction on our policy.
So basically he's saying when the economy's good, they don't need to lower rates. What most economists are saying is that when the economy's good, if you want to really stimulate the economy and drive growth even more, you lower the rates slowly but surely. Most people think rates should already be lowered. Jerome Powell, being cautious, says no, sorry, Bob.
Well, let's pivot to regulatory policy. Chair Powell, as you know, there have been serious concerns expressed on both sides of the aisle and across America and across industries about the Basel III endgame proposal.
Let's get to the charts. So when it comes to my baby TMF, which is, of course, 20-year Treasury bonds, aggressively, it is leveraged, it is aggressively. If you want to be conservative, invest in 20-plus year Treasuries, you want to do simple TLT. But the reason why I'm so incredibly hyped about this is because it went from literally $500 a share in the year 2020 down to as low, how low can you go? Not 51, it was even lower than that. It was actually, if you look at the charts, y'all, it was as low as $38 a share. So it went down dramatically, but it is creeping up. And the thought process is as inflation goes down and the Fed funds rate goes down, right now it's at 5.25%, this goes up. The value of long-term treasuries go up. The yield curve starts being inverted, and we predict that's going to happen. Now, when is it going to happen? We do not know. But look here, we had a huge gap up in anticipation that Jerome Powell would say that they are still on course to lower rates, which he basically did. So that happened. You see that big old gap up? Whoop. And another gap up today. Whoop. Another 1.65%. In 2 days, y'all, look at that. In 2 days, it's up by almost 6%. Now, 6% every 2 days, we'd be some happy campers. I mean, heck, they made it 2 days with some investors making a whole year, right? Not the ones that's rocking and rolling, but you know, the average stock makes about 7% a year. And we still have some gapping up to do, right? We have to fill this gap. Filling this gap means from an investment standpoint, you know, we got another 5% to go. So Jerome Powell speaks on Thursday. If he doesn't drop any bombs on us, if he keeps it cool, calm, and collective and tells people what we want to hear, that they predict that they're going to lower rates 3 to 4 times this year, like he said today, then we will probably see this going up to $61 a share. Now, how long will it take? It might take a few weeks. It might be a few months. I think by the end of the year, we're looking at $80 a share or higher, which means something being at $57 now going to 80. That is a pretty good return, right over 50%. So when will it happen? We don't know, but definitely if they continue to go down the road of lowering rates and the market prices that in, and once they do lower rates, my profiteers, we're going to get some growth. So you guys, it is what it is. He's not lowering rates in March like some people predicted last year, but they are saying that they're going to stay the course. All right, my profiteers, I hope that helps you guys out. Yes, Jerome Powell said that they're going to lower rates. We just don't know when. Hopefully sooner rather than later. But comment below. Jerome Powell, is he stop the cap? Is he lying to us? Or are they really going to lower rates? And what do you think about inflation? Is it going to go back up? Or do we think it's going to continue to go down? I know one thing. They say inflation goes down, but groceries are still too high. Anyways, comment below. Let me know your thoughts. As always, love is love. Let's make some paper profits together, y'all. Peace.
And you just wanna get paid. Tired of making the money mistakes. Make a payment on your bills and you still late. Yeah, Payneful profits to help you seek change. And you just wanna get paid. Yeah, tired of making the money mistakes. Make a payment on your bills and you still late. Payneful profits to help you seek change. Yeah, cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different. You know.